Hi traders, welcome to the new weekly forecast for the trading week beginning on November 11th. Now US elections are done and Mr. Donald Trump is back as the new president of US, and the markets have given a very strong welcome to him. US dollar is looking strong. US 10-year yields are also looking strong, which means the investors want to stay invested in the riskier assets like stock market and crypto. So without wasting much time, let's dive deeper into the charts and find the new tradable opportunities for the week. So let's begin our technical analysis, and as usual we will start with dollar index. So here I have applied multiple Fib extensions, Fib retracements on the higher time frame, and as I've analyzed in my previous video, we have marked three major zones here. So this is our support area. Currently dollar has gone higher than the middle area, and the next resistance upcoming is around 106.77 to 107.77, and it's looking quite strong at the moment. So I'm expecting in the coming week or coming days, dollar should rally to 107.77. No signs against. MACD histogram looking stronger on the weekly chart. Let's move down to daily now. Now here on the daily chart, dollar rallied strongly post election, and here it's sitting at a very crucial support zone. So it has gone higher, and right now the current support is at 103.59 to 104.44. So this is the support zone I'm talking about. So it is anticipated that dollar will remain strong. It may go into consolidation for a while, and until it remains higher than 103.59, the next target is 106.77 to 107.77. And going to lower time frame again, now 4-hourly chart. Now even on 4-hourly chart, if you notice, it's forming a bullish pattern here. So we've got low, higher low, the rally continues, and then it creates new higher lows. Now this is the point from where the new rally started, and I can see that it's quite strong, and we also got the retracement. Now if it gets further down, it might come back to 103.59, and then the rally should resume. Alternatively, if it breaks below, which I don't think so, it's possible at the moment, if it breaks below 103.50, then we might get a deeper correction here. So let's apply Fib retracement starting from the lowest point to the recent high. So in case if we get a break below 103.25, then we might see dollar index coming to the deeper levels, Fib 50% or Fib 61.8, and then continue in the bullish direction. But the probability is low. And this time I've also covered US 10-year yield. Now this is the instrument which will give you the it's highly correlated with US dollar. So if US 10-year yield chart is looking bullish, it means the investors, they are showing confidence in the economy, and post elections, yes, they believe that US economy will do really strong, it will remain really strong. So the investors are putting money in US stock market and even crypto. Now based on weekly time frame, what I've done here, I've just checked the wave count here. So this is the first wave up, corrective wave down, the strongest and the longest third wave, followed by fourth, and it completes 5-wave structure, bullish structure, with bearish divergence on the top. And once the 5-wave structure is done, then it is expected the instrument should retrace back to 38 or 50% level, or maybe to 61.8, and then resume in the same direction. But if you notice, US 10Y chart, after completing the 5-leg bullish structure, the correction is not so deep, and in fact it has completed ABC here. So which means the investors, they want to remain invested in US 10Y, And here I can also see bullish divergence on histogram. Right now it's stuck under the falling trend line and also the fib levels here. Once we get a break above, then we may expect the next bullish rally. Alternatively, we might see some consolidation here at the current level. So in the short run, we might expect that US10Y may come back to 23%. So this is the zone I'm talking about, and it's a very strong magnet zone, and it can break in the bullish direction. And if US dollar is going to remain strong, then Euro USD will be definitely bearish here. So Euro is inversely proportionate to US dollar index. Now here is weekly chart for Euro US dollar, and the things are looking quite bearish at the moment. So what I've done here, so I'll apply fib retracement from top to bottom on the previous bearish leg. And if you notice, the current bullish rally has touched precisely 61.8 and now it's moving lower. So currently Euro USD is sitting at an important level here. It's a support level around 10670. I'm also going to apply fib extension on the bullish rally here. So if the bullish rally continues, then it should go to 1.1460. Fib extension 61.8. Now moving down to daily chart, the things are looking quite bearish here. So it's continuously printing lower highs and lower lows, and I do not see any bullish divergence on the chart. The only thing is right now it's just above an important level of support here. So we might get some short-term bounce here, but any short-term rally should be taken as an opportunity to sell, at least as per the current scenario. Now I'm going to apply fib extension in the downward direction. So I'll start from this high, which is at 1.1194. So I'll apply fib extension in the downward direction. And currently Euro USD is hovering around FE2618, and the cycle completion level at FE300 is anticipated at 106265. So the idea is we might get short-term bounce, and any short-term bounce should be taken as an opportunity to sell. In case if it bounces strongly from the current support zone, I'm going to mark the duplication of two fib levels again, and it's around 1.0995. So it's gonna be strong resistance area. Now let's move to 4-hourly time frame. Even on 4-hourly time frame, it's printing lower highs and lower lows. We have high. Give me a second. We have high followed by lower highs, next lower high, lower high, lower high, and lower high. And this was the short rally prior to the election announcement, and now it has given a new lower high. I do not see the divergence being completed at the moment, the bullish divergence, so which means the sellers will remain in control, and I'm expecting that it's gonna break below 106970, and the next destination is 106265. Moving to 1-hourly chart. Even on 1-hourly chart, this is a strong dump, and there was short-term pullback, and now the sellers are in full control. Yes, we are very close to the support zone, so I do not recommend selling at the current level. If you want to take a sell trade, I want you to take after the bounce. So let it bounce back towards 108 or 1088, and then we can take a new sell trade. So this is the plan for euro dollar, and the next instrument I'm going to cover is Bitcoin. Now, post-election, the entire crypto market is looking very promising. In fact, I've also covered in one of my weekly videos about Dogecoin a couple of weeks ago, and it has rallied beautifully. Now, I'll come to the weekly chart. In fact, I'll start from monthly chart here. So looking at the monthly chart of Bitcoin, what I've done here, I've applied Fib extension on this rally. So this is the first Fib extension I've taken on my chart. And the first FE618 was at 54,754. FE100 level is at the current price, that's around 78,763. And the next Fib extension is 1618, and that's a level of 117,000. Now, looking at the monthly time frame chart, I do not see any signs against. MACD lines are strongly bullish, MACD histogram rising clearly. Now, let's move to weekly chart. Even on the weekly time frame, it looks quite promising. So we have the new weekly bullish structure here. So this is the first wave up, then we got some consolidation here. This is the third wave. Again, we got the fourth wave, which was consolidation, and now it is rallying again. So the current level is a magnet level. I've applied a new Fib extension here, starting from the low at 54,754. A, B, and C, and right now we are at 161 of the new leg. It's a duplication zone, it's a very strong magnet zone. So we are at a strong resistance area right now, but nothing against on the charts. So the buyers are in full control for Bitcoin, and I do not see any bearish divergence on the chart. MACD lines strong and clear, they're rising, and MACD histogram is also rising here. Now, when I've applied next Fib extension, so taking the duplication zones on the two Fib extension cycles, again, I got a very, very strong magnet zone that's around 117,000. Now, it's a matter of time. Now, when Bitcoin rallies, we know it rallies very strongly and it covers the distance quite fast. So I won't be surprised that in coming weeks or months, Bitcoin rallies to 117,000. Now, if you want some levels in between the intermediate levels, they are clearly displayed by the green Fib extension lines. After 78,000, I see 85,000 on the charts, followed by 92, 97, 105, 110, and ultimately I'll be looking for 117,000. So if you want to stay invested in Bitcoin, it's good time now. You can stay invested, and the next target would be 117,000. Coming down to daily chart, strongly bullish, MACD histogram rising, MACD lines are also rising, no bearish divergence on the chart, and the important support lines are here, the Fib extension lines. The number one is at 72,293, followed by 67,437. So if you get a drop, if you get some discount from the market, consider it as an opportunity to buy. So any pullback towards 72 or 73 or maybe 67 should be taken as an opportunity to buy. And the 4-hourly chart is also ultra bullish at the moment. And here is the current scenario. Bitcoin is precisely in the magnet zone. 80,149 is the Fib extension 161 level, and 72,293 is also displayed, and 67,437 is also displayed by Fib extension. So my suggestion is stay invested in Bitcoin and hold it at least till 117,000. And ultimately, I'll be covering gold. Now I'll go to the monthly time frame chart here on gold. So what I've done here, I've applied Fib extension on the first bullish rally, and the major levels are displayed on the chart. The green lines, the first one is 1996, that's FE618. The second is FE 100%, and that's around 2578. Now I've also applied Fib extension on the lower time frame, that's weekly chart. So I started from the lowest point, which was around 1637, and right now we are very close to 261 FE, the second one, the Fib extension on the weekly chart. But gold did not complete its 261 extension level. In fact, if you notice on MACD histogram, there are signs against. So we have bearish divergence coming on MACD histogram, but not on MACD lines, which means there will be some short-term pullback, and ultimately gold will resume its next bullish rally. Now it's a matter of time. It wants to go lower. It wants some correction here, and I believe the strong level is 2576 to 2578. So gold should come back. Gold should drop at least towards this level. So the level is 2576. Now I'm moving to daily chart. So we have found bearish divergence on weekly, and now on daily, again we have bearish divergence on MACD lines and MACD histogram together. So which means the buyers are exhausted and the sellers want to take control of this instrument. The major resistance is at 2757. So I've mentioned this level in my previous video, that until gold remains lower than 2757, now I'm expecting it to go lower. And moving to the next lower time frame, that's 4-hourly chart. So what I've done here, I've applied Fib extension in the downward direction, taken from the highest level. So this is the fake break above 2757, and first level down, first leg down, pull back, and gold dropped up to FE 161.8. Now the pullback was anticipated, and 2709 is now playing a major resistance. So until it remains below 2709, also until it remains below 2757 on the higher time frame basis, I'm expecting gold will complete its correction and it will move downwards towards 2598, 2600 level, the round number, followed by 2578. So the plan is, in the short term, I'm looking to sell the rallies only in the short term. And moving forward, when it will complete its correction and it will resume its new bullish trend, I'll keep you posted. So I believe I've covered the major instruments, and this is my trading plan, and have a profitable trading week ahead. Take care. Bye-bye.